Hello, trading has closed on August the 18th, 2021. We always begin with our disclaimer. It's my trading plan for tomorrow, August the 19th. I can be completely wrong and all trades should be at your own risk. Please click like if you like it and tell your friends. Look for the pattern with the early high, which is this. Typically it's a rally day, failure is a straight line drop. And that is your straight line drop. This is a reminder of what we said. We said yesterday's high should hold. When the rebound completes, should have another strong move down. That's what happened. We had mixed signals. We didn't get any of the common things. Doesn't have to happen. Just the commonest things to happen. We have a new target from today's pattern. 44, 54, 33. I'm hoping it doesn't print actually because MEJT almost always leaves a failed target as a major change in trend. That doesn't have to be the one, but I'd like it to be because this looks like pretty negative action here. During the day, MEJT gave a signal to buy. That's the failed target. Said this drop wouldn't stick. Said this rally wouldn't stick, said this drop wouldn't stick, and it's already retraced. There is some hope for a bounce here because of the wall into the close. This represents panic selling. It's a straight line move. Tends not to be the way institutions act, tends to be the way retail customers act when they say, just get me out at any price. If it works, we gap up tomorrow over this high. It'll work a lot of the times. It works most of the time, frankly, but in the early stages of a possible major change in trend, it's hard to buy into this. It's just hard for me to stay short into this overnight. We'll see a number of ways we can count this. I don't know which is the right one. They might all be wrong. But if this is the first move down from the all-time high, you have a nice fib relationship. This is 161.8% of that move right here. So it's one of the logical places for this to end. You can't really see this point on a longer term chart, so we'll show some other ways to count it, but none of them are as clean as this. This was your 2B top yesterday. This is confirmation today because we closed under that low, closed under multiple highs, even some lows, 2 days after hitting an all-time high. So that's a rejection of the high. So we should have more to drop, but it doesn't mean you have to drop in a straight line. This is the count we have. I still think it's pretty good, but until we undercut this low, can't be certain it's right. And that low is 42.33. Who wants to wait for that? This is a different count. It's possible to count this as A, could have this as B, and you can count ABC here with C and A having a fib relationship. Now, there really isn't a good fib relationship between blue C and blue A. There doesn't have to be, but if you count A of A as a expanded flat, which looks kind of forced but doesn't break any rules, then we get C equal to A right there. It usually when you have to fudge like that, it counts wrong, but there are a number of reasons to think this might hold for a little bit. Here are the reasons. We have a spike in the E-mini. We dropped further and volume decreased. Usually these spikes are close to market lows. The lows don't have to last very long, but it's another sign we could be hitting a very short-term low. NASDAQ McClellan oscillated under its lower Bollinger Band. When it reverses through, it's a sign of a low. It hasn't reversed through yet. Volatility indices are over their upper Bollinger Bands. When they reverse, it signals a low. They haven't reversed yet, but if they do, it's credible. The hourly E-mini bar is completely under its lower Bollinger Band. Usually that's a sign that the pairs have bit off more than they can chew. I'm not trying to pick lows here, just a question of, is this the optimum time to enter a new short? And I would have to say it's far from the optimum time, even though I think we're going much lower. We'll see what Norm Winsky has to say when he returns tomorrow. Tomorrow's pattern has early low, doesn't mean you won't gap up. Today's normally bullish pattern featured a straight line drop instead. Should lead to more weakness, although it doesn't have to come immediately. We have a higher MEJT target. Unless we gap down smartly, the rules say it prints, but I prefer the target fails because I want to see a failed target and a major change in trend. The wall into the close typically represents panic selling. Tends to be reversed by gapping up smartly the next day in many cases. There are a number of oversold indicators and relationships compatible with a bounce, but this early in the downtrend, I'm looking for places to go short rather than trying to play these bounces. Until some significant prior lows fall, remains the chance this decline just a minor inconvenience, but the sentiment indicators suggest it should be more than that. Don't forget the amateurs were overinvested in record amounts when this high came in, and such excess optimism deserves to be punished. So we look for much lower prices, but that doesn't mean they have to start right now. When you're this early in a decline, you always can have a crash. I think it's the odds are against it at this point. And there's a real possibility that at least over the very short term, we could rebound from this and even gap over this high. I don't think the long side is where the money is going to be made, but there is a higher target and there is a chance of gapping up. Not the kind of thing I risk my money on, but I also wouldn't stay short overnight when you're this oversold. And if you miss a crash, you miss it, that's all. Tomorrow has the early low, and that's today's call.